Good afternoon and welcome to our Drought Assistance information session. I'm Kathy Sims from Rural Biz Training and we're located in Dubbo in central New South Wales and also in severe drought like most of Eastern Australia at least is at the moment. I've got with me this afternoon Liz Brown, Rural Financial Counsellor from Mudgee, and John Beer, Rural Financial Counsellor from Bourke. I've asked them to join us today to basically run through, from a rural counsellor's perspective, which is a very practical approach, the most common forms of drought assistance that are available. Firstly, two types of drought assistance that are available Australia-wide, so no matter which state you're in, and then because we are located in New South Wales, you'll find that the last half of this recording does refer just to New South Wales. So thank you very much to Liz and John, and let's get started. So I'll pass over to you, Liz, if you could start off.
Certainly the farm household allowance is generating a lot of inquiry at the moment, particularly when the lump sum additional payment was announced of up to $12,000 per couple. That is paid in two tranches. Or $7,200 for a single person. John, correct me if I've got any of those figures wrong, but certainly a lot of interest in the farm household allowance. It is an income support payment from Centrelink, and the rate is as it is on the screen at the maximum payment, and there are additional payments. So I find that everyone's being encouraged to try and lodge as much online as they can through MyGov, and I think John's got a bit more experience of that than I do, so I'll let him comment. Otherwise, you can ring the Drought hotline and they can assist you, contact your rural financial counsellor, and if necessary, we can go through and look at the paper forms. There's a fair bit of information to present, but as you can see by the rates of payment, it's worthwhile. And the Drought hotline and also the rural financial counsellors are here to assist you with the paperwork. So don't be daunted. What thoughts have you got on it, John?
Yes, Liz, you're right. I think the preferred way of applying for this payment is online. That needs to be done through a MyGov account. So the first thing I find I need to help people do, if they haven't already, is to set up a MyGov account. Some people haven't got that. Like to get a MyGov account, you need an email address. And again, some of my clients I've dealt with haven't got an email address, or if they have, it's linked to another MyGov account. So often we need to set up a new email account to begin with. Then we set up a MyGov account. And then the third step is to link that to Centrelink online. So those three steps need to be done before you can even start the application process. And just to give people a realistic idea of the time frame involved here, I find it takes about 3 hours, 3 to 3.5 hours, to go through and do that whole process from start to finish. With a client, that's to set up a MyGov account, link it to Centrelink, do the application. There's a lot of documents that needed to be uploaded at the end of that, so they all need to be scanned into the computer as well. So that whole process can take anything up to 3.5 hours, I found. And that's per client. And bear in mind, if you're talking about a couple, each party to the couple need to do their own application, so you can repeat that time. Maybe not quite as much because all the information is already to hand after doing the first one, but it can still take anything up to a couple of hours to do the second person on the partnership as well. So quite a time commitment, both from the client's point of view and from our point of view. But as one of my clients said to me yesterday, when you're desperate, you do anything. And he was a guy that, I never thought would come and sit down and spend 3.5 hours with me to do a Centrelink application, but he did because he's getting desperate. One thing is we need to remind people now is that originally the farmhouse allowance was limited to a maximum term of 3 years, but that has recently been increased to 4 years. So people who have already received 3 years payments can now apply again to get that final 4th year. payment. And with the farmhouse allowance, people can start and stop as their circumstances change. So you don't have to stay on it for 4 years. If things improve after a year or 18 months or something, you can come off the payment and then save the rest of it for later on when you might be in need again at a future date.
John, it's Kathy here. I just wanted to touch base with this healthcare card. What's the story with that? I can see on the screen.
That's just an automatic issue, Kathy. So people on the farmhouse allowance automatically get the healthcare cards. So that helps them with their scripts and things like that.
Right, so that's medicines on scripts. They can get them at the cheaper rate. Is that right?
That's correct. Yeah, with the healthcare card. That's it.
That's good.
So that's a useful, that's a useful thing to have. Just, especially for anybody who's, getting a lot of medication.
Yep.
I don't know that we've talked about the assets limits and things for this farmhouse allowance. So to be eligible, you have to have farm assets of less, at the moment, 2.55 million. That is in the process of being increased to 5 million, which comes into effect on the 1st of November. And then there is an off-farm assets test as well of $387,500, and that's, of course, not very much. Anyone's got maybe a house or two, investment properties, things like that, that might preclude them from applying. So it's good to see that they're increasing that farm asset limit, because that's been a limiting factor, certainly in my area in recent years.
Yeah. And Liz, maybe if you could just talk through that meaning. I've got the word net in front of assets there. Could you just talk through that?
Yes, it's your net farm assets. So as John said, at the moment 2.55 and up to 5 million. So that is net of any debt that is attached to that farm. So they will look at the value of the land, they'll look at your livestock, your plant and equipment. However, they will deduct any farm-related liabilities against those assets, against that plant and equipment. And the same with the non-farm asset test, which is, as John mentioned, the 387,100,000, and for a single person, I think it's about 255. And in the majority of cases, that is again net of any liabilities. There are some complicated methods of assessment with some of the off-farm assets, but it's, I think, as we're all saying, don't self-assess, and certainly get the application in. John, have you been doing much with that 80,000 off-farm income offset?
Not really, Liz. There are quite a few clients who have off-farm income, and this is a good provision. So the 80,000 off-farm sort of offset, this allows people who have loans where they're paying interest on a loan, they can utilise the off-farm income against that interest cost on the loan. So in effect, that sort of negates the value of their off-farm income. So whereas that might have previously precluded them from applying, now they might be eligible. For example, if they've got an off-farm income of 40,000, but at the same time they're paying $40,000 on interest on a bank loan, well, that negates the off-farm income, so that would allow them to apply and possibly get the full farm household allowance payment.
That sounds good.
I think that's a useful version. There are a few stipulations around that, though, I must make clear, because I did try and assist a client with this last year. The client has to approach the bank to see if they can renegotiate the terms of the loan before they can apply for that. Now, if the bank will renegotiate the loan, then that again precludes them from using it. In my case, the client had drawn an extra amount on his loans in the last 12 months, so it prevented him from using this offset allowance.
Right.
So there are a few criteria around that.
Yeah. So I suppose one of the things that sitting here listening to the two of you talking, it does sound like people should be going in and sitting down with someone like a rural counsellor to actually find out the ins and outs of this farm household allowance.
I think so. It's not very straightforward, Kathy, by any means. I'm still learning myself, and having been doing this for 3 or 4 years, always seems to be something new. You can learn little tips and tricks and so on. So definitely get people to take some advice.
Because certainly what I hear on the radio quite a lot, when people are talking about this, there seems to be a lot of comment around the fact that it takes a lot of time and it's very complicated. And I really think that probably if people said, I'm just going to go in, sit down and talk to a rural counsellor as step one, then probably a lot of those complications could be ironed out. At least they'd know more clearly what it is that they need to do.
Yes, I think that's right, Kathy. So just an initial conversation, I would say, to tee up, cover off any initial inquiries, and then we can arrange a more of a longer appointment for someone if they want to sit there and actually go through the application process.
Yes. Just one other comment in there, and I'll just make sure that I'm not out of date in my thinking, but the net assets is market value of assets. So I know that some people get confused and think it might be insured value for things like machinery or household goods and those sorts of things, but it's actually market value. So it's and it's really what you would get for cash if you were selling your assets. I'm talking about, again, machinery and household goods, those sorts of things.
Yeah, particularly for household goods, people get quite confused with it. So it is the drag them outside and put them in a clearing sale or a garage sale. Certainly, that's the value of those assets. So yeah, certainly for the household contents, it's something that is much lower when you go to sell them than you insure them for. Definitely, Kathy.
Yeah, and I'm guessing that the two of you would have a fair bit of experience of seeing what other farmers are putting down as their assets. And I mean, one person's household goods is pretty much like another person's household goods. We've all got the old second-hand white goods and the couch that the kids have, had their birthday parties and other things on. Everyone's furniture looks a little bit tatty, and so I'm assuming that you've seen quite a few people go through and have a fair idea on what to put down as a reasonable amount.
Oh yes, Kathy. In my case, often varied anything from say 10 up to 30,000, or sometimes more, and that's usually split, 50% with the wife or the partner. We're just sort of in that range often.
Yeah. John, I would be ecstatically happy if you came and offered me 10 grand for my household goods.
I know. I'm sure that's way overvalued, and like you said,
they're yours.
People are, well, that nice latest state-of-the-art TV and computer, Kathy. Come on.
No. Very ordinary. And quite, like I said, quite used, well worn, mine.
Yeah.
Okay. Yeah. So I think we've probably spoken a little bit about this. That I think John said that you can get it for up to 4 years now. So if you've previously had it for the 3 years, you can come back and apply for another year. And you might only want it for 6 months, and then you can go off it and then come back and go back onto it. So it's 4 years in total. That's correct, is it?
That's right, yeah, cumulative. So, and be mindful that it's also a reconcilable payment. So probably about 12 to 18 months after you've been on it, they will ask to see your financials, your profit and loss, and the information for that period. So it's really good to just keep a good eye on your tax planning, and yeah, be aware that if you are going to be making a profit or reasonable profit in that period, that you do take yourself off the payment.
And Kathy, just before we move on, you might just want to jump back a couple of slides, because I think we probably didn't spend too long on there's a $1,500 voucher for an accountant, because part of the application process will involve the client accountant putting together some financial information for Centrelink. So there's a $1,500 voucher which will pay the accountant for doing that. But on top of that, there is also access to some training and advice. So there's vouchers again up to the value of $4,000 for our clients to receive some training. It might be analysing financial statements, or it might be something that they particularly want to do. So there's some vouchers to help cover the cost of that. And the final point on that one is that there's a financial improvement agreement. So this is what we call a reciprocal payment. So in return for receiving the payment, the clients are expected to undertake some measures to improve the farm viability so that they're not going to be dependent upon this payment forever and a day. So they'll work with a case officer appointed by Centrelink and with the Rural Financial Counsellor during the time that they're on the payment to try and put in place some measures to improve the farm financial performance.
Okay, so just playing devil's advocate here, John or Liz. So if I'm a farmer going to apply for this, am I going to have someone in Centrelink telling me how to run my farm?
Be or not, they're very helpful. They're very user friendly.
And John?
Yeah, no, most of the ideas are suggested by the client. You know, the case officer are there just to make sure that the client is doing something, you know, planning to do something different to try and improve the situation. So yeah, it's really very much down to the farmer to come up with some ideas. But you know, if they're stuck for ideas, then the Rural Financial Counsellor, the case officer, can perhaps make a few suggestions.
Right. Okay, that's a bit of a relief. To get all this, so there's a fortnightly payment. And Liz, you mentioned that you can get up to $12,000 lump sum payments, and 7,200, I think, if you're a single. So there's that money is on top of the money that we had. We were talking about the fortnightly payments. Is that correct?
Is correct. It's purely you need to be on the payment by the 1st of December to get the full 12,000 if you're a couple within this financial year. If you're on the payment by the 1st of December, there would be 3,000 each, so 6,000 in December and another 3,000 each, so a total of 6 in June. But if you get on the farm household allowance after that period, you're going to get only one instalment. So as things stand at the moment, the top-up payment for a couple or for a single person is only in this financial year at the moment.
Okay, so I think I'm hearing there that you really need to get your act together, get onto this payment if you can by the 1st of December this year, and then a married couple would stand to possibly get, now let me see if I've got this right, around 14,000 maximum.
24. Sorry, it's around 24 to 25
24
for a married couple. Yeah, plus 12 on top, yeah, of that. And then a single person, it's about 14 plus the 7,200.
So we're saying that a married couple, if they got onto it by the 1st of December, would in the following year get around about 24 plus 12 is about 36,000. If they qualified for the maximum amount. I suppose sitting here I'm thinking, well, most of us would put in a fair bit of effort if we thought at the end of our effort we could qualify for 36,000. I don't know, to make that profit on a farm, most farmers would have to put in a fair bit of time. Because we're talking about profit. You don't have to actually buy fertilisers or buy stock or anything to get the 36,000. What it needs to do is to get in and get these forms filled in. Is that right?
That's exactly right, Kathy. So, you know, there is a time factor involved, but in return, in relation to the reward you get for that, I think it's very well spent.
Yes, I think that's a really important thing, because I think sometimes we get tied up in the negative side of things where, yes, it does take time, and I'm quite sure that everyone would rather be poking their eyes out with a hot poker rather than filling in Centrelink forms. But having said that, the rewards, as you say, can be very good. And I think the fact that people like the Rural Financial Counsellors, and they're Australia-wide, are there to help, then it doesn't have to be something that you pull on by yourself. Any other comments about the farm household allowance from either of you or Liz? John?
No, I think we've covered everything from my point of view, Kathy.
Okay, and Liz?
That's yeah, a good basic outline of it, and certainly, yeah, there are Rural Financial Counsellors Australia-wide. So I think you could Google it, and you'll find the list of locations near you.
Thank you. So we'll move on to the concessional drought loans, which again are available Australia-wide. And maybe if I could ask you, Liz, to just give us a bit of an overview of them.
Look, now they're administered by the Regional Investment Corporation. So this is a fairly new organisation for us to deal with, having been set up from the 1st of July, and really sort of feeling my way with these loans. They still want you to maintain 50% of your final debt position with your commercial lender. So it is something that you need to think about, and how that will impact upon your arrangement with your existing financier, because of that capping of 50% of your overall debt. So even if you're getting additional loans for operating or capital costs, you still need to maintain a 50% share of your debt with your existing commercial financier. So that's one factor to consider. And I think look, there's a lot of information on the Regional Investment Corporation website with it. I will make a comment upon the principal and interest component when we get to that screen. But what thoughts do you have, John, on it?
Look, it is still fairly new in this format, as you say, Liz. But I think there is a multitude of uses that these loans can be used for, as well as refinancing existing debt, or 50% of existing debt, can be used for drought preparedness measures, such as water infrastructure, hay sheds and things like that. Can also be used for operating costs, as it says on the second point there, so ongoing sort of working capital costs if needs be. And then when the times come, can also be used for restocking or cropping, once this drought breaks. So there is quite a range of uses that they can be used for. And favourable terms there means the loans can be repaid at any time without any penalties. And from there we can see, originally they were set up you could borrow up to 1 million. That has recently been increased to 2 million. Personally, I haven't got too many clients in this area with that amount of debt, but I'm sure there are clients with that amount of debt, especially the big cropping boys, who would be have debt up to that sort of amount. The interest at 3.58% is competitive, although I'm finding a lot of commercial debt at the moment is around about that 5% mark anyway. So it's not a big incentive to refinance existing debt, unless you're talking of a fairly big debt. And it is, first, as it says, the last point there, first 5 years is interest only, which is quite a good terms. Anything to add, Liz?
Yes, I think, as you say, there'll be more interest once the drought does break and people are looking at, sowing crops and restocking. I think that'll pique the interest in this measure. Just sort of be quite aware that while the first 5 years is interest only, the principal component in the following 5 years is quite significant, in that they estimate that they'd like you to knock the debt down by nearly half, so you can refinance it by the end of that period. So a lot of people, I think, are considering the first 5 years, and then we'll look at their options perhaps for the remaining 5. But it's just something to highlight. But I think we'll get a lot more interest when it breaks and they're looking at restocking and other inputs like that.
Okay, thank you very much. That again, looking at how we apply for those loans. So directly to the Rural Investment Corporation, as I think Liz and John have both said. So you can Google them up on their website. And at the risk of sounding very repetitive, I'm saying to get your rural financial counsellor's help with the application. So it's always good to go to someone who maybe has at least done one or two of the applications prior to yours, and usually your rural financial counsellor will either be that person or will know someone that can help. So finding your rural counsellor, remember I said that they're available Australia-wide. I do have the link up here on the screen, so you could pause at this stage if you wanted to and painfully write it all down, or have a go and see if it's active for you and see if it links through, or just do a copy and paste. So just make sure that you have a look at that website, which is the Australia-wide Rural Financial Counsellors Network. Any comments on any of what we've covered so far from you, Liz?
We work in conjunction with the family's accountant and their consultant as well. Often in the mix there's lots of different areas of expertise. So look, we work in and being flexible. It's, as a rural financial counsellor, you can contribute as much as is required, or really just act as a coach and general guidance. So look, you're not committed to us doing the whole thing. We can just help coordinate or highlight some of the pitfalls or areas to look at.
And I suppose we've missed saying the very obvious thing, that your service is free, which is probably very important in this day and age, and particularly in drought times, and also that it's confidential. I encourage you to go and use your rural financial counsellors. If you haven't been a user of them before, go and shake their hand, make yourself known to them, and then maybe go back and have an appointment to talk about what may be available to you.
John speaking here. If I can just interrupt and just say one thing. Like, between us, we've got a wealth of experience. I mean, personally, I've been a rural financial counsellor for the last 11 years. Liz, longer than that. And a lot of the other financial counsellors around the country have also done considerable length of time. So there's a wealth of experience and knowledge that they've acquired, and more than happy to share that with the farmers.
That's right. I think it's a great resource. So thank you to both of you for that. That's what we've covered so far is available for the whole of Australia. What I was going to move on to now is the assistance that's really more New South Wales centric. So if you're coming from another state, feel free to turn off now. So maybe if we can just take these through. Maybe Liz, could you give us a bit of a rundown on this one?
These no interest loans are proving very popular at the moment. Originally, when they were announced, there wasn't the transport subsidy for livestock to sale or fodder. So a lot of people are actually not looking at this loan for that purpose at the moment, unless they're going to be over the transport subsidy cap. But certainly the ability to spend the money on water infrastructure and fodder infrastructure and the banking of genetic material. The important thing is that you need to lodge your application prior to undertake any of the work, and it is quite a user-friendly application in the scheme of things. While there is no interest at any point in time, there are some set-up fees that are associated with them lodging a caveat. So there's a title search, and look, I've seen fees around $280 to $400. So there is a fee on the setup, but once you set it up, you've got 12 months to draw the amount down, and then after you've drawn it down, and you draw it down by the presentation of tax invoices. It doesn't have to be a receipt, it's a tax invoice for the fodder infrastructure, the water infrastructure. You draw that down, whether it takes you 6 months or 12 months, you do need to draw it down in 12 months. Then once you've done that, there's 2 years with no repayments, and then following that there's 5 years to repay the principal. So look, they're very popular. I think they're softening the effect on the cash flow in this financial year and this year and pushing it down the track, but a lot of people are looking at it. Is that what you're finding, John?
Yeah, it has been very popular, Liz. Helped a lot of clients. Again, initially they were intended to cover the cost of transport of fodder particularly. So that's not may need it, but I'm sure most people will still make use of them. They may not draw the full 50, so whatever you've drawn after the 12 months, that will become the balance of the loan. So whether it's, if you've only spent 30 or 40, that's fine. That'll be the amount of the loan, and then you'll, like you said, have 2 years and no payments, and then whatever the balance of the loan is, you'll pay 1/5 each year for the following 5 years.
Thanks a lot. Okay, so we might just keep moving along. Okay, John.
So transport subsidies, Kathy. This is the one that I think everyone was waiting for, and I know, from meeting with farmers, this is the one that most of them were continually asking for. So finally, it's now available again for this current drought. So 50% of the cost of transporting livestock to sale or slaughter, to or from adjustment, or cost of transporting water or fodder. So this has been a real help. I mean, I know in my area it costs as much to transport the fodder as it does for the fodder itself. I saw some invoices this week, $6,000 for the actual cost of hay, $6,000 for the transport. So being able to get 50% of that transport cost back is a great help. And this is backdated to the 1st of January of this year. So people can backdate those claims. So each trip is up to 1,500 Ks. Maximum is $5 per K plus GST. If you're carting your own stock, you can also apply. You need to submit copies of your logbooks and NVDs just to prove the movement. And you can claim up, so it's 20,000 per year, but because it's been backdated to the 1st of January, that gives us an extra 6 months, so the total value of the claim can be up to 30,000 over that 18-month period, which goes up to the end of June next year.
Thank you. Liz, did you want to add anything to that?
No, really, as John says, it's up to 20,000 in this calendar year, and there's 10,000 cap for the first 6 months of next year, and I hope we're not doing it then. But you do need to get the majority of your gross income from primary production, and there needs to be net off-farm assets for the people involved in the business need to be below $1 million. That is also the same with that 50,000 no interest loan. The non-farm asset test for the people involved needs to be below $1 million.
Sorry, Kathy, before we move on, just to say there is now a facility to make the claims for those transport subsidies online, and the system is very easy at the moment. You do your first application online, you sort of upload your invoices and your property rates notices and so on. But after that, once they've approved one transport subsidy claim, any further ones you just email an invoice through and they'll just pay you half the cost of the invoice. So the system in place at the moment is much improved from what I remember when I first came 11 years ago. Everything had to be witnessed by a JP and had to get the proof of payments and all those sort of things, but it's a lot easier now.
So this next one I found a bit confusing because it looked like it was very similar to the other one. So, John, can you talk us through this one?
Yes, well, Kathy, it is similar to the other one, but this is permanently available. This is a transport subsidy just to cover the cost of transporting stock, either for sale or to an abattoir. So flat score 2 or less. Again, it covers 50% of the transport cost, and again, the limit is up to 20,000 per year. Difference here is that the farmer has to show that they're in financial need. So either they're on the farm household allowance payment that we talked about earlier, or they're eligible to be a client of the Rural Financial Counselling Service, and we're required just to put a letter with the application to confirm that. But I've helped a lot of people with those type of applications, certainly before the transport subsidy was introduced. But even so, my understanding is that this 20,000 limit for the animal welfare transport subsidy is in addition to the drought transport subsidy, which was on the previous screen. So if I was a farmer, I'd be using the drought transport subsidy for my fodder transport, and if I was eligible, I'd be using the animal welfare transport subsidy scheme for or movements of stock, then you could, in theory, benefit up to 50,000 in total from transport subsidies.
That sounds great. Liz, did you want to add anything to that?
John's covered that well. That's fine.
Okay, well, I'll move right on to the Farm Innovation Fund and throw it to you, Liz, if I may, please.
Yes, this is also has been very popular at the moment. If anybody's looking at water or fodder infrastructure, then certainly they're going for the no interest loan. But yeah, prior to the seasonal conditions really declining, there's a lot of interest in this scheme. It's at 2.5% interest rate, and look, there's been a lot of work on shearing sheds, yards. It really covers fencing. It covers most things that you can think of on farm to help you drought prepare, and for work health and safety, the farm infrastructure. So certainly yeah, the term of the loan varies with the amount that you borrow. So it is up to 20 years, but that's usually when you borrow the maximum amount per project, and it's 250,000 per project, and you need to undertake your project within 12 months. So I sometimes have clients who come in and want to do this, that, and the next thing, but you really need to think, can I achieve this within the 12-month period? So you get a pre-approval for whatever amount. You've got 12 months to draw it down. Once you've settled that project down, you can apply for another project, and the project can have a mixture of activities in it. It doesn't have to be just drought preparedness. It can, they've been very worthwhile loans. You do need to get approval from your banker, your existing mortgagee. In the majority of cases, they're reasonably comfortable with this because it is going to improve the value of your asset base. So in most cases, it's not an issue, and the reason it's at 2.5% is because the Rural Assistance Authority come out first ahead of your bank. So it's always a good idea to chat with them. What are your thoughts, John?
Yeah, that's exactly right, Liz. And I was going to mention that point about the security, because as you say, these take priority over the bank, whereas that Drought Assistance Fund, the $50,000 interest-free loan, that actually ranks after the bank. So, there's not as much hassle perhaps with one of those smaller loans for smaller projects. But certainly, as you say, this has certainly kept me busy in the last few years, helping people with projects using this finance. In my area recently, I've helped a lot of people with applications for the total exclusion fencing, because kangaroos are a big issue in this area at the moment. So farmers are really looking to reduce that total grazing pressure. A lot of them putting up this total exclusion fencing, sometimes with their neighbours, forming a little cluster and doing that. And again, we've been using these loans for that purpose.
Right, that sounds good. Now, all of these things that we've been talking about for New South Wales are through the Rural Assistance Authority, is that right?
That's right, Kathy. Look, and they've got a good website. It's just www.raa.nsw.gov.au. And the home page has got all these things listed there. Just click on the one that you're looking at, and it'll take you straight to all the information.
Being New South Wales, it's a bit easier to actually give the direct contacts for the rural counsellors. So maybe, Liz, if you could talk about how to get in contact with your local rural financial counsellor.
Certainly with the central region that John and I are both in, though it's quite widespread, there's the 1800 number 940 404. That goes to our regional office. Particularly when demand is high, it is worthwhile making contact there. They can email us, and if I work on my own, and so does John. So if we've got clients with us, we're not readily able to answer the phone at those times, but the regional office can send you out forms, can supply information in the interim if we're not available. So that works for our region, and look, the numbers are there for the northern region and southern region as well. Also on the RAA website that John described, they've got all the contact details for New South Wales rural financial counsellors as well.
And that list of contact details on the RAA website would have your direct phone numbers as well, does it?
It does, Kathy. It has our mobile numbers as well, so each rural financial counsellor has got a personal mobile. So
yes.
Those numbers are listed on the RAA contact list.
So people can just look at the contact list and find the rural counsellor that's closest to them, and then ring them directly if they prefer to do that rather than going through the regional offices. So
That's right.
So if you look at which colour area you belong to, there's your regional offices, or your alternative is to go to the RAA website and have a look there for the full list of rural counsellors and choose the town that's closest to you, or most convenient for you to be able to go and see your local rural counsellor. So, John and Liz, what have we forgotten?
Kathy, I would just like to add, while we're talking about the Rural Financial Counselling Service, so previously we talked about federal government assistance, we've talked about New South Wales state government assistance. We are also, the Rural Financial Counsellors sort of get to hear about other assistance that might be available from time to time as well. And just for example, at the moment, there is some funding through the CWA up to $3,000, excuse me, to help farmers just pay some urgent bills they may have to pay, or school fees or something like that. So we can point people in the right direction for that. Other assistance, for example, often through people like Vinnies or the Salvos, they can access vouchers to help people with things like electricity bills or telephone bills. So if there's people with an unpaid bill, and just haven't got the money to pay that, we might better help point them in the direction to get some help toward that as well.
That's great, because often it's those sorts of bills that, while they mightn't sound big, but they're an enormous worry, particularly electricity and phone are really important. Liz, is there anything that you are thinking that we've forgotten to talk about?
Not at the minute. One other thing that is out there is obviously, do take, look at all the mental health websites. There's a lot of demand for that at the moment too, and the resources are available. So please take advantage of those. Also, there is the Farm Debt Mediation Act in New South Wales. So if anyone's seriously worried about their position, just know that there's a lot of steps and processes to go through with the bank, and there's plenty of opportunities to, look at your situation and discuss. They don't, no matter what you hear, they don't just turn up and lock the gates. It doesn't work like that. So, you need to keep opening the mail and keep on top of it and keep talking to people.
Okay, thank you. And just touching on that mental health topic that you did, I'm assuming that the rural financial counsellors would have a list of contacts that that would be useful if someone was looking for assistance for themselves or for maybe a friend or a neighbour or a family member.
Sorry, Kathy, yes, I thought Liz was going to answer that one, but yes, we do have a list of certainly local people in each town that we can refer people to, or give them further information if necessary.
Thank you very much, and I've just wanted to let people out there know that certainly your local rural counsellor is obviously thinking of you. That's what their whole focus is, about helping people in drought times at present, and certainly people who are experiencing financial difficulty. On top of that, Rural Biz Training has been here working with farmers for a long time, and we're hearing the stories. We can't offer the help directly because we're not part of that rural counselling network, but we very much want to thank the two rural counsellors today who have brought their experience and helped us prepare this little video to put out, and hopefully you've found it of assistance. And if you've got any further questions, either go to your rural counsellor, or if all else fails, ring our office, and we will at least help you find the contact for your closest rural financial counsellor. So thank you very much again, John and Liz. I really, really appreciate it, and I'm quite sure there's going to be a lot of people out there who are also saying thanks to John and Liz. Thank you very much.
Thank you, Kathy.
Kathy, for the opportunity.
Thank you.